I gotta turn this shit down. Okay, close this up. We're gonna bring this over. Boom, boom. We've got the workers here already. Hit that thumbs up button. Boom, boom. Okay. Let's see. We're gonna go over some scans. With yesterday's down market, I don't expect a lot of scans to show up today. I got the workers here for the floors, so you're gonna hear maybe some banging. Core investments. Let me expand this out. There we go. Nothing. Energy names. Nothing. Levered ETFs. Nothing. Low cost Vanguard. Nothing. Spider sectors. Nothing. Let's see in my not owned pile. Hershey. Oh, that's just a monster stock. Hershey's been on a run. Okay, I'm going to stop it. Let's look at, if you are new, this is TrendSpider. I scan for stocks that are in a bullish, Spotify. They're in a bullish trend with the MACD cross up. Starbucks. Xerox. That's interesting. Innoviz, look at that one. You got a MACD cross up on that one. Okay, ARC Holdings. Let's go down to the Dow 30. Dow 30. Nothing in the Dow 30 crossed up. Let's look at the NASDAQ 100. NASDAQ 100. Dun, 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 dun. AEP. Hey, Penny. Back into bed. Sorry, you're going to hear a lot of that. eBay. eBay's going to cover that gap. You're at 44. The gap's at 46, which is a nice 5%. I'll bring up eBay. eBay. I'm not going to bring up American Electric. I'm not a big utilities guy. S&P 100. Let's look. Duke Energy, even though I bring that up, and then Duke Energy. I mean, Duke Energy down here at 91. No brainer. You're right at the 200-day at 99. And let's bring up Duke Energy. No, ma'am. Good girl. Back into bed. We got Duke Energy and Starbucks. Let's look at the energy sector as a whole. I doubt there's a bunch in here, but energy's just been the crazy one. No. ICD independent contract. Vivicor. Nope. Okay. Apple is down in pre-market. Apple, you know what? I'm going to bring Their earnings are next week, I think, May 4th. Yeah. If breaks 162. 162 is a support. Oh, excuse me. Excuse me. Dun 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 dun. Amazon. If you like ASMR with mouth noises, as someone pointed out before, yeah, mute Bloomberg. Morning, Mike. Take a hit of the vape and take the shirt off. Disney, Devon. The big one of the core portfolio that's up is Microsoft. And I got to tell you, NVIDIA, I mean, it's rolling over here. Let's look at SPY. You know what I'm going to do? I'm going to do a chart for SPY. Oh, I got my volume up. That's why. I was hearing somebody talk. I didn't know who was talking. Here's the 4 hour on NVIDIA. Just got you out with a loss. 3% loss. I do have someone asked about AMD for Chatty. Chatty. You got this gap down here. And it's since the last earnings, but they're not till May 25th. Wow, Snowflake's up 5% in pre-market. Okay, let's look at SPY. Yeah, if you guys, if the 5 people watching haven't seen, Activision Blizzard is down at $70. It's down 10%, 77. So it's gonna open up in this neighborhood down here. That's gonna be create a gap down and a gap up between 80 and 83. Microsoft and Activision have both said, Christian, that they will appeal. And it doesn't take a genius to figure out. The UK just completely ignored. They call out Call of Duty as an exclusive game, and Microsoft has said we'll make it available to everybody. So I don't know how it's exclusive. But yeah, let's look at SPY. I'm going to do some trend lines on SPY, and we're going to look at it daily. Just got you out. You know what? SPY. I'll go with a 3% gain. $65-minute. I gotta blow my nose. Hold on. And look at the 65-minute. Look at the rollover. I'm going to make this a little bit more. So you can see it. Look at that. I mean, look at that breakdown right there. Started at 9:30 yesterday. And just yesterday from SPY, no way. I mean, total breakdown. Now, you're up in pre-market today. So, might be interesting. But let's go look at a daily. That's what I want to look at. You know what? Daily's not long enough. There's the weekly. And see how you rejected right at that line. 420 is definitely a, I mean, even below 420, but 420 right here. Let's do an auto fib. That's an interesting one. What's 50 divided by 470?
It's approximately 0.1063.
It's 11%. Okay. This weekly shows it really well. And that shows it perfectly. I'll go over this on the podcast, but see this? I mean, it's automatically drawing a descending wedge, which is the green line, which it seems to have broken out of, but may be getting pulled back down. And the ascending wedge, the red lines, where it's got a clear resistance up here at 420. And it's bounced off that in August, in December, and in January, and now in April. And it bounced down and just went down to the lower part. And the lower part is 385. Okay. Dum 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 dum. Okay. Dum bum bum bum. We got our scans in. We got everything. So I may start here. And by the way, if anyone's listening, for the 5 people who are watching, I'm not pausing, I'm not doing anything. So whatever happens, happens on this recording. Let's look at the 4-hour on this one. Yeah, I think you're going down to this gap. Boeing's holding up the Dow. Good earnings on Boeing. Uber under 30. Fuck it, we will do it live. And what was the other one? Roblox under 40. There's 2 stocks. I'm going to put this in the chat that you should be looking to buy upon confirmation. We do live chat. 2 stocks, and I'll pin this one. Pin. Boom. Both of those, I think, are opportunities. Uber specifically, I think, long term, time horizon on that one. Once you get under 30, you could go down to 25, but long term, I think that's a good play. And then Roblox, they just gapped down because they announced for some reason at the end of March that their user data, people are using it less, and they've just continued to slide. So upon confirmation, I would say both of those are good ones. Okay. I'm going to start this mofo up. Good morning. It's Wednesday, April 26th. My voice is, the Barry White voice is getting slightly better. Still not good, but slightly better. I had several messages from people that they enjoy my voice. So get ready. I want to thank out, I think it was Rohit. Somebody sent me a nice Canva. If you guys haven't used Canva, by the way, Canva's got some really good AI. But the intro that they sent, thank you to who sent that one. I do have to step up the production at some point. But I wanted to start out today with talking. Obviously, Microsoft and Google last night just blew it out of the water with the AI talk. Here's where we are. Earnings are beating. Visa said the consumer is strong, and Visa beat, including international travel, boosted. They gave strong guidance. Inflation is coming down. Bond rates are below 4%, if you can believe it. It all adds up to the potential that the Fed has initiated this soft landing. If we have a slight recession, there's the soft landing. And it may imply that the Fed doesn't have to raise rates. I think they will, but it may imply that they don't. And maybe they cut rates much sooner than expected. And as a side note, you will hear everything in the background. Dogs barking, saws. We're getting the floors done. I am sure my parents will interrupt everything. So I am not hitting pause. You will hear every interaction, every little piece. And if you want to see, if something does happen and you want to see it, just go over to YouTube. But I wanted to start out with SPY. SPY, yesterday in the afternoon, it got you out on the 4-hour algorithm. Got you out with a 3% gain. This was a buy that was initiated March 17th at 395. It got you out at about 406, 407, somewhere in that neighborhood. SPY is trading at 406.63. It's up 0.18 in pre-market. And what I wanted to do was go back to a weekly look at SPY, because I think this shows you exactly what I'm talking about, whereas we just don't know where we're at. You can see right here. This goes back to, here is COVID in March of 2020. And so this is a weekly, so each candle represents a week. And you can see during 2020, you just had a steep up climb. December 2021 and January 2022 is when you started to see the down climb. And that's when we began the bear market. Now, the question is, Are we still in a bear market or are we in a bull market? And that question hasn't been answered because you can see this is a downward wedge, the green lines, okay? You can see that support level down at 360 in that decline. And what you're seeing in the red line right here is an ascending wedge. So that indicates a bull market. And the support level down there is at 385. The resistance level here is 420. You can see we broke out in August 2022, just above that wedge line, but we pulled back down to the bottom, 364. Then in November, we made a run for it. Didn't quite get it in November 22, and we pulled back. And this was December, late December, early January. And then you saw that big bull market to start this year, and that went until February. And then in February, we pulled back, and you pulled back to about 380. Then you had this bull market in March and April, and we've hit 420 again. So the resistance level seems to be 420. If we get over 420, by the way, the next resistance level is 470, according to the AutoFib. Fibonacci. If you want to look up Fibonacci, go to Investopedia.com. So that's an 11% upside. The lower support, by the way, still remains about 385, I think. Again, you're at 406, so 385 would be your support level. Anything below 385, look out below. You're probably going down to the 360, which is this descending wedge in the continued bear market. If we're going to continue to see this bull market, I think you might hit 385 and then bounce up. Wait for your confirmation. That's the overall look at the market. I don't know exactly where this market is going because, like you can see, there's a bull market indication and there's a bear market indication. And this is a weekly, so it's a long-term outlook. Obviously, when you get into the 4-hour, you can see that it really turned over with that button hook over the last couple of days. Your RSI is down at 39. So you're an oversold market. This one's turning over. I would expect us, if we're going to fill this gap, it would be between 395 and 398. If you want to see that one filled, then I would buy the SQQQ or one of the Bear SPY levered ETFs. If you want the ETFs that are in there, sign up for TrendSpider. I have them all in a list called levered ETFs that we trade. And there's triple and double and single levered in there. I was reading about Google and Microsoft earnings yesterday, and I think Gene Munster, just like the cheese, Gene Munster, he's a great analyst. I think it's Loop Capital is what he was with. If you want to see the actual quote and follow him, I posted it on Twitter. I didn't post it anywhere else, but I posted it on Twitter. He wrote last night, comparing tonight's Google and Microsoft earnings calls, when the topic of AI came up, feels like Google management is drinking tea and Microsoft is drinking Red Bull. Google stock is up 1%, Microsoft is up 9% in the after hours. And this was last night, so it's obviously changed. Google's AI tone is optimistic, measured, puts the customer first, do it right, light on details besides AI search. Again, they just haven't implemented a lot. Microsoft is talking about how much they're integrating AI into many products in the near term. They're going to try it out and see if it works. Huge difference. Now, when we look at Microsoft, they're still up 8%. I have said wait for the pullback. The danger was when you're waiting for the pullback on Microsoft, it just may not pull back. If we go and look at some of the fundamentals of Microsoft, you can see the PE is 30. Traditionally, the PE has been 36 on this one. So has it pulled back enough? I don't know. I mean, here's the thing. They're growing like wildfire. Their margins are 68, 70%. It's a huge, well-run business. And Satya Nadella has absolutely 100% nailed it. Cloud is key. And now he's moved on to AI. And they're talking up the book. And so Microsoft right here, you can see it. It's got this button hook right here. It got up to about 290, the 52-week range. 52-week high is 294. The average target price is 300. And so they're right up against that kind of target price. So people are going to have to raise their targets. You can see April 26th, BMO Partners market to outperform. They raised it to 347. April 26th, Macquarie upgraded them to 325. So they're buttoned up right up against that. If you want Microsoft, and if you think we're going down to 385, this one's going to turn, and it's going to turn hard. So again, you're up in this range at 297. If I even have to pull this down, just so you're clear, the candle will start out here. It will start out at this 10%. Look at it yesterday. It closed at 275. It closed that gap. I said you don't want to start a position. You really want it down in the 260s. Probably wrong. Will it come back down there? I don't know. I mean, we'd have to have a major just fall flat on their face to do something. With Microsoft, I'll talk about it a little bit later too. The EU just declined, said that the Activision Blizzard deal will not go through. We'll talk about that a little bit later. But Microsoft is there. Now, take a look at Google. Google's up only 0.23% to 104. They're trading at 104.85. They closed at 104.68. So they're flat. And sorry, you're going to hear coughs. You're going to hear everything. But yeah. So $1.17. I mean, Google just, and we talked about it before. Christian pointed out Netlist lawsuit, which could greatly affect Google's next earnings. It's a huge one. But you got this ascending wedge. I say Google remains to be a buy anywhere below 100. If you want it at 104, I think I own some shares at just above 100. I don't have a problem with that. I think Google is a well-run business. I think they will start to use AI. They are kind of like, if you want to, I think Microsoft going after Google is kind of like the Tesla, and Google is more, and I hate to put it this way, but they're more GM. They're just the established player. They're trying to play it safe. They're trying to do things that doesn't rattle the saber. Meanwhile, Microsoft is aggressive in going after them. That's the way I would do it. Google, their cloud revenue was up 21.9% year over year. Search revenue up 1.8%. So again, if we're going into recession and advertising is being reduced, there's two places where advertising will not be reduced. It's search, and whether that's Google or Microsoft, it's search and it's Meta. Those are two. Microsoft is talking about how much they're integrating AI into many products in the near term. Try it out and see it. Microsoft is up so much because they're cloud and their guidance. Google, on the other hand, announced a huge buyback. I think it was $70 billion, second only to Apple's buyback that they announced in the previous quarter. Apple's earnings are coming up next week, and we'll talk about that in a little bit. Google, by the way, if you want to buy it, GOOG is the one that they buy back. So as they start to buy back, I think you're going to see GOOG come up. If GOOGL is the one with the voting rights, but because Larry and Sergey have so many shares, your vote will never count. I mean, don't think your vote will ever count. Larry and Sergey have set it up where your vote won't count. GOOG is the one that you want to buy. It performs a little bit better at last check, but you can go on to Seeking Alpha and look for yourself. David Yoakum posted a interesting one that I retweeted, and I'm going to my profile so I can show you kind of how what it looks like and if you can follow him. By the way, if you didn't see it, Elon Musk was the inverse Kramer well before anybody else. But here's David's chart. And he says, QQQ getting rejected off its all-time high average VWAP. for the second time. Last time, the Qs lost 25% of its value within 75 days. So you can see right here, here's the all-time high average VWAP right there. He's got it. This is Trend Spider as well. He's just it's TradingView. But he's a much better chartist than I am, David is. And if you want to watch a Trend Spider video that I did with David, go to my YouTube channel and just type in, I think it's the third or fourth video or something. It's, you can just look up Yoakum's charting. But right here, this is an interesting one. Do we go down there? This was May of last year, April of last year, and you lost it. So I don't know where we're going, but David definitely thinks that we probably will go down. I think it goes back to SPY. Like I said on the weekly, if you look at SPY on the weekly and you see there's the descending wedge, which is a bear market. There's the ascending wedge, which is a bull market. Which one are we in? I don't know. David seems to think that we might head down to this 363. If you look at the Qs, on the other hand, and we look at a weekly chart on the Qs, let's pull it on weekly. You don't have any of those wedges, and you're still above the 200-day, well above the 200-day. You've been going well. Ever since December, you've been in this bull market. Now, is it turning over? Who knows? But something to think about. Take a look at it. Take a look. Now, two stocks that I want to look at. CrowdStrike. Lena, I think it was Lena. Let me look. Lena on Facebook asked me. She said, hey, CrowdStrike is a good time to buy. Your boy owns CrowdStrike. Your boy owns CrowdStrike at a significantly higher price. I believe it's around 180 that I own it. I put in a fairly big bid on this one, and it was last year. I think it was around this. Maybe it was 169, and I wrote it all the way up to 220, 210, somewhere around that neighborhood. Excuse me. It might have been June of last year, but see all those great charts that looks. And then we went into this just total bear market from August to December. And I bought a little bit on the way up, but I didn't equal my buy. I was waiting for a year. And again, I want to hold this one long term, so I want a dollar cost average into this. You've got that ascending wedge that we talked about. In my mind, there's two things. And I know I wrote a note. I guess I didn't write a note. But I own two cybersecurity stocks, and it's CrowdStrike and it's Palo Alto. And I want to show the difference here. But see that ascending wedge? We've broken down below it. I would rather have you buy when there's some type of confirmation, although I will tell you, I don't think that this one is in danger of getting back to the $99 or $100 mark. I think anything over 115, I think you can be safe getting into it in small bits. I want to see if this continues, because here's the difference. Oh, sorry, CRWD. They are not making money. Their forward PE is 40. Their price to sales is 12. Year to date, they're up 16%. Over 1 year, you're down 40%. This is a highly, highly speculative name. The average target price is 169. The most recent is Goldman. They priced it at 141. And again, your boy owns it at 180 something. You can see these guys are selling at the 130 mark. And it's not small. It's kind of large, but it's not huge. You can see under 100, they're buying. So I would rather see you wait for this one to tell me that it has confirmation if CrowdStrike is your pick. Palo Alto, on the other hand, remember, you've got this ascending wedge. Palo Alto, PAN-W, is the symbol. It's up 1.15%. You don't have that ascending wedge, but boy, do you have a bull market. And it was at 138 in January. You got all the way up here to 200. You've pulled back, obviously. I think it's going to cover this gap down to 168. I think it started to cover that gap. I think you're going to finish that gap. And this is why I want to say be careful with CrowdStrike. Now, CrowdStrike has already pulled back, and their RSI is significantly down. This RSI is 25. The issue is, I think CrowdStrike has the ability to go to 150 from 120. I think this one has the ability to go to 200 from 180. The 150 is a significantly more percentage move. So, but here's the thing. When you go and you look at FinViz, Palo Alto, their PE is 2,371, but at least they're making money. That's the key. The forward PE is 39. So far this year, Palo Alto is up 30%. So you're beating CrowdStrike. I think CrowdStrike has more room to run, but they're going to have to basically turn a profit. If either one of these start losing money and continue to lose money, I think you have the danger of it going down. But it's cybersecurity. And these are the two that I would pick in cybersecurity. The only one that's really making a good profit in cybersecurity is Fortinet. But this one has had its run. I think you've got a danger of really pulling back down here from 63 down to 51. FTNT. My dad owns this, and he's owned it for quite a while. You can see the PE is only 59. They're making money. They've had multiple bottoms down here. You can see it rejected off that trend line right there. I just, in my mind, CrowdStrike and Palo Alto are the two. So, Lean, I hope I know I didn't give you a great answer. I know you said long-term. Just buy it. For long-term, don't worry about the price. You know, I bought it at 180. I'm still holding at 180. My thing was it's long-term. I'm going to dollar cost average into that. In a good market, both those companies are absolutely 100% worth the price that you'll pay today. If your time frame's like 2 to 5 years. Chatty, I think it's Chatty. My apologies if I mispronounce your names. But Chatty asked me about AMD. Is this one a good one to buy? AMD right now is on a pullback. You can see here, April 6th, the algorithm got you out with a 13% gain. You haven't gained confirmation since then. You just haven't, and it still doesn't have confirmation. I would be nervous buying into this market, because I don't think we have a clear direction of the market. I think you've gotten some good earnings. I think you were down almost close to 2% yesterday on the NASDAQ. You're going to be up today because of Microsoft and Google and Meta reports. But AMD, it's volatile. Your boy owns it here. Again, this is one of the ones that I own at about, I think, $100 is my average purchase price. I bought it long term. Right before the downturn, I think I was up, and then I'm down, and I didn't get out of it. So I'll dollar cost average into it. I think I bought a little bit more in February around here, around 83, but you're way back there. So I just haven't played this one well. Your RSI is down in the long-term scheme of things. I think you're fine on AMD. To be honest with you, I think you're perfectly fine. I think Lisa Su, who's the CEO, she's got her eye on the prize. The PE is 94. It's expensive. It's up 29%. The average target price is only 98, and your price right now is 83. Your 52-week high is 109. So I don't think there's a huge upside to this one. The one that has gotten popped crazily is PE, and NVIDIA. Its PE is 150. NVIDIA is the one that everybody's like, oh my God, it's another $400 stock. And yeah, it could go back to 400. A couple of years ago, I think it was at 400. But this one is one that's up 79% year to date. Its average target price is 288. You're at 262. If you don't want this volatility and the craziness of those PEs, but you want a chip company, look at Qualcomm. They got a PE of 10. These are the chips are 5G. If Apple comes up with their own 5G chip, so be it, but they haven't been able to. They're going to have to renew with Qualcomm. Qualcomm is the chip that is in self-driving for Volkswagen, the largest car maker. So you've got a lot of positives. The average target price is 152. You're trading at 114. My price on this one is 112. I think if you get under 112, I think you're good. If we look at the chart on this one, again, with the algorithm, none of these are buys. Just know that you've got to wait for confirmation on these. But for long term, Qualcomm's not a bad one. And all the while, you're getting a 2.81% dividend. Look at the most recent upgrade from Susquehanna. They upped them to 140. Now, those price targets are usually, crap. You can wipe your ass on them. But again, in my mind, if you're looking, Chatty, if you're looking for AMD, I don't think it's a bad play. I don't think NVIDIA is a bad play. I think a lot of these just don't have confirmation right now. Even Qualcomm doesn't have confirmation. Let's take a look at some earnings. After the bell today, it's Meta. I thought it was going to pull back to below 200. It ain't pulling back to below 200. You don't have a buy on the 4-hour algorithm here. You just don't. Their earnings are expected to be, this is going to be another one where he probably comes out with some type of thing about AI, how they're focused on it, how they're going to integrate it, blah, 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 how they're going to do search, how they're training models. I think you'll see this at 220 after earnings. I think he's continuing to cut costs. He's announced layoffs. They are significantly cutting their costs. And I think as the consumer is strong and as people use, I don't think they're gauged by their average daily users anymore. I think these guys are gauged by money. And they're going to print money. And if you look at a long term, let's look at a weekly of this one. Look, I mean, back here, January 2022, $321 stock. If we go over here to and look at some of these, remember I said Microsoft is at a 30. This is a PE of 23. 23 for Meta. And they're going to up their earnings. Year to date, they're up 72%. The average target price is 227. I think, again, if this was in January 2022, a $320 stock, and all of a sudden you're at 207, imagine, on this run, you said, God, I wish I could have bought this, right at COVID. COVID, when everybody was shut down, that's where this was trading. And then it ran up with COVID because everybody was using it, blah, blah, blah. Then we got this drawdown and he's spending so much money on the metaverse. Now he's spending nothing on the metaverse and you doubled your money. That's the meta story. Tomorrow, we have Amazon. If you don't think that these guys are going to pump up AI, you're crazy. They announced also in the letter to shareholders that they're going to start their Starlink-style internet service, and it's going to be cheaper than Starlink. I don't trust that they're going to be as good as Starlink. Look at Blue Origin versus SpaceX. It's just a crappy company. But yeah, take a look at that. Amazon, I hold it long term. I say anything under 100, you absolutely 100% buy it. Anything over 100, I think if you've got a long-term outlook, I think you're fine. We talk about PE a lot. This PE is huge. They need to cut their costs. Here's what you have to know about Amazon. Amazon is not a demand problem. Amazon is a cost problem. They hired too many people, and he's getting it in line. The other thing that you have to know is their cloud services. Their cloud services, while they were significantly growing, Microsoft and Google are taking cloud service customers away from Amazon. And what Amazon has to do is grow the actual ecosystem even more in order to gain customers because their customers are leaving them. So that's the worry on that one. And then on Friday for earnings, you got Exxon. Exxon, your boy owns Exxon at about a $30 average purchase price. This is just a monster. I don't know that you necessarily get in at these prices. But the good news about oil is that they return it to shareholders, 3.12% dividend yield. Year to date, you're up 5%. Last year, if I told you from January until April, the end of April, you were up 5% in any stock, you would have said, hallelujah. This year, there's some stocks like NVIDIA that are up 70%. You got some really, really good companies that are up. So it's a little bit less likely. Let's talk about First Republic. These guys are on life support. The question is, will they survive until the weekend or will they die over the weekend? When will they die? Right now, you're trading at $7. It closed at $8. Here's the problem with First Republic, and you can think about it. They are in heavily in San Francisco real estate. And so you've got all of these San Francisco real estates at mortgages at 2% with buildings, commercial, residential, whatever. But that's the assets that they hold. They hold 2% paybacks. So what they have to do, since they have the deposits dwindling, they have to actually sell some assets. And so when you have to sell assets that are currently paying 2%, whereas a bond is currently paying 4%, and the mortgage are long term, you have to sell those at a loss. And so the news that is coming out of FRC is that management, where this was a $120 stock just a month ago or 2 months ago, the management of FRC says, we don't want to sell this because we think it's worth money, and we don't want to sell stock at $7 or $8 because we think that our stock is worth $100. Well, you're caught between a rock and a hard place. These guys are literally just dumb, and they're going to lose shareholder money. Because here's the thing. If they can't get somebody to either, quote unquote, buy the business, and they may buy it for $5 a share. That may be what's being offered. Hey, we're going to inject capital into you for $5 a share. They also may have to sell the long-term debt at a huge loss. And if they do that, then again, your stock price goes down. But here's the worst case scenario, and it's what Silicon Valley Bank did. Silicon Valley Bank sold their assets at a loss. Then they issued shares that they couldn't sell, and people just continued to go into a panic. And so the last-ditch option at Silicon Valley was, hey, Fed, we need help. And when the Fed comes in, guess who makes zero? Shareholders. So even though the stock price looks great at 7, and I had said, hey, buy this at 13 because it's a $20 stock, I had my hopes that management was not dumb. I was wrong. These guys should be absolutely 100% fired. They should make nothing. They should be completely wiped out. And any bonuses, any payments. They had a 20-minute earnings call and took no questions. They didn't want to answer any questions because these guys are just dumb. They're trying to play hardball, but they're just being dumb. And so the question is now, what do you do? Well, if you got your lunch money, like I said, do not put a ton of money into this. But if you got lunch money in, my suggestion would be take 50% of it out and just take a loss. Then you've still got 50% in. So if you do go up 200%, then boom, you're even. But if you're in at $13, sell half of it. Just sell half of it and get some money out. Just don't, because if for some reason they don't make it, they do make it and survive to Friday, I think over the weekend you're going to see it die. And if the feds come in, then you make nothing. That's the dangerous part. That is just the dangerous part. Like I said, if you wanted to play some of the bank stuff, PAC-W killed it. They're down a little bit from where they were. They were up 20% after they announced that their deposits are fine. Again, it's deposits. That's all we're looking at in these banks. It's deposits. If you've got enough deposits and you don't have a bank run, you're fine. So PAC-W, great play yesterday if you got into this one. One stock that I am long on, that you guys know I'm long on, is Apple. Apple is rumored to be getting into the AI hype, and you may hear a bunch of this on their earnings call next week. AI is you can see what it did for Microsoft. They are rumored to get into AI-powered health coaching through the Apple Watch. God, listen, if there's anything AI is good at, it's health. Look at the, Google AI saves dog. Google AI Health, you can see it's it's almost better than doctors at some point. Like this guy, the AI dog thing. This guy took his dog to a vet. Vet couldn't figure out what it is, gave him one of two options. He basically went home with one option. Dog didn't seem to get better. The vet says, well, it can't be the other one, so we're going to continue down this path. He just may need better. The guy went to AI, and AI said, obviously, it's the other path. And I'm butchering this story, completely butchering this story. But AI said it's the other path. He went to another vet, got the medicine, $1 a day. So, yeah, AI. Here's what you have to worry about Apple. If it breaks down below 160 before earnings, I worry about what the implications are. Because if it breaks down below 160, I think you're looking at lower 150s before you're looking at 170s. Right now, the algorithm has you in March 6th. It has you in at 153. If you are following the algorithm and you got in at 153 and your time frame is short, this is the button hook. The algorithm most likely will get you out. Look at this MACD. You've crossed down. Well, there's a couple of other factors in my algorithm than just MACD, but I do think that you're looking at it coming down and it getting you out. So be careful with Apple. Their earnings are next week. And by the way, did you guys sign up for the 4.5% savings account with Apple? So essentially, if you have an Apple credit card, you get daily cash back. And I don't spend, my Apple credit card is specifically used for Apple products where you save 5%. That's all I buy on this. So what happens is when you buy an Apple product, the next day, or, say you go out to Chipotle and you buy a burrito. The next day, basically the Apple card gives you your cash back. You guys know with credit cards, you get cash back. It's like anywhere between 1%, somewhere around there. The Apple card gives you it back that day, the next day after you spend it. Well, what Apple has done is rather than just stick it and you can spend it, to pay back your credit card and stuff, they stick it in a savings account and it pays 4.5%. So I signed up for it. It's fantastic, nice and easy. Use your wallet. Again, I'm long Apple. I think it's a great company. I think they do innovative stuff. They're going to be a bank. Guys, they're going to be a bank. Talk about, all the tentacles that Apple has. They have buy now, pay later. They now have a savings account. They now have a credit card. Think about the data that these guys are getting on their consumers as well. Regulators, back to Microsoft and Activision Blizzard. Regulators blocked the Activision Blizzard deal. Microsoft and Activision said they will appeal it, but appeals are not usually successful. This one might be, just because ATVI is the symbol for Activision Blizzard. We talked about Microsoft being up near 300. I think you can buy it at any point in time because you should be long. This one had an ascending wedge up here. Just so you're aware, it closed at $86 up here because people thought that the UK was going to okay it. They dinged it, and you're now down here at $78. It was at $77. But there's an assumption right now that this appeal may actually go through because what the regulator said is Call of Duty. They called out Call of Duty as a game that Microsoft should not have exclusive rights to, because owning a platform like Xbox and having Call of Duty would greatly inhibit competition. Well, bullshit. Microsoft has said, we don't understand that because we've even said it's going to be available everywhere, and we've given it to people. They didn't even sell it. They gave it to Sony. They gave it to NVIDIA, the 1 and 2 in the gaming world. Microsoft's number 3. So, I don't understand it. Again, the deal price is $95. What you have to know is if Microsoft backs out of this, it will be a $3 billion pay to break it up. Now, here's what you have to know about this one. Pre-deal, And I want to go back here. Let's see. Maybe I need to go back to a weekly. Pre-deal. This is where the stock was when the deal was announced. It was about $65. So if you buy it today at 77, assuming that Activision Blizzard has actually increased their earnings, increased their gaming counts, and with Call of Duty, their PE is 45, so it's high. But that's with the price at 86. That PE is going to come down with a price of 77. The average target price is 92. Again, 92 because Microsoft offered 95. So it might be a good opportunity. Oh, and now they're cutting the lawn. Like we didn't have enough noises with the dogs barking and stuff like that. But yeah, that might be an opportunity too. Let's talk about Boeing. Boeing announced earnings. It is up 3%, 207. They beat reaffirmed guidance and production numbers, specifically on the 737. They said that later this year they will be making 37 planes per month. Right now they're at 31 per month. That's huge. Huge. So they're up. Again, I reiterate, I think you can buy this at 207. I don't think it's a bad one. I say anything under 200. It's a company that is probably mismanaged. When they start returning actual shareholder value, meaning the dividend, it's a $400 stock. I mean, it's too closely tied to aviation. It's too closely tied to the consumer. It's just a stock that, I think you could buy GE as well for the same kind of reasons. But Boeing is one that, they'll screw it up again. It'll go under 200. Enphase announced earnings. They really screwed things up. They're going to gap down. They're down 20% to 177. Just poor results, poor guidance. Just, you take a look at this. If we look at a weekly of, sorry, I look around. I felt a dog jumping on me, but no. Enphase here, they're going to open up down at about just above the 200-day, which is where they were trading, I want to say back in like 2022, the early 2022. But yeah, I mean, it's just, you can see it's still a good stock. In my mind, I think even with their guidance, if you're looking at a long term, 177 on this is cheap. I mean, 177, let's see when the last time it was at 177. It was back March of 2022. So you've taken your turn down. Again, with Biden kind of coming out with solar energy and stuff. If you don't know what Enphase does, go to FinViz. They're expensive. It's not, cheap. Their PE is still 80. When it's at 220, it'll come down. But their earnings, they brought down. Year to date, they're down 20%. The average target price is 288. Bank of America Securities, neutral to underperform. Their price target is 169. It's still expensive. I just think if you're long-term looker at solar energy, I think you're fine. Look, 320 up here in December or January. I mean, that's probably where it's going back to. It's not going, not going under. They're making money. It's just a matter of what they'll do. Two stocks I want to point out that are on the core portfolio for me, and they've just gone under the price target that I think is Uber. Uber's trading at $29.88. It's under $30. The last time Uber was under $30 was back in January, and it went all the way almost up to 40. I think that's where you're going to see it again at some point. Uber's earnings are coming out May 1st. I think you're fine. It doesn't have confirmation, but it's under 30. If you want to grab it, it's under the 200-day. I like it. The other one is Roblox. And Roblox, they at the beginning of the month, I think it was mid-April, they announced something crazy that I think it was April 17th, that their user base was declining. And it was just, look at the spike in volume. It hasn't regained confirmation. It's down here right about the 200-day, but it's under that $40 price target. So those two stocks are ones that I noticed that if you have a long-term outlook and you want to look at, maybe rolling the dice on some, I think those two are really, really good opportunities long term. This isn't something where I think short term you're going to make 100% on your money or something of that sort. Specifically Uber, I think in a healthy, remember Uber IPO'd at 41. And it's not like they split. It's not like they did anything wrong. They've continued to do well. If you go into the Uber app, they're making a ton of money off of advertising. They have so much information on you, from what food you order, from what you ride, from your location, all of that stuff. They can do a ton. They can become a super app. So I like that one. And Roblox, just metaverse. When Mark Zuckerberg got out of the metaverse, Roblox is the one in the metaverse. And with Apple's headset coming out, they're probably going to be used for Roblox. There's probably going to be an integration that, nobody wants to partner with Apple, but Apple's going to come out with something with Roblox. It just because the user base is in Roblox. So if your kids use Roblox, buy Roblox. Now for some scans, Spotify, which I do the algorithm, the podcast on, 138.52. They're trading at 139. Their user base just grew and exploded. They're still not making money, but the user base did explode. It just got you out of this 13%. Looks like the high over here was 145. It spiked up yesterday, but 138. I think you're okay. You've still got that kind of confirmation, so I think you're good there. Starbucks, SBUX. Starbucks is one that is flying up. The buy-in was March 17th at 99. You're at 109 on a Dow stock. That's huge. Secondary cross-up, Starbucks. Another one that looked interesting to me today was eBay with a cross-up. You've got this ascending wedge, 43.97. The reason why I said eBay, this gap up here, it just looks like that gap may get filled. Now, their earnings are coming up April 20th today after the bell. I think it's post-market. Let me see. Did the earnings come out? Yeah, post-market today. So it could take a leg off. But again, with Visa saying the consumer's strong, blah, 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 eBay may be one. And I say I don't like utilities, but Duke Energy keeps coming up. DUK, March 28th, 95.05. I think anything under 100 on this one, I think you're doing fine. Duke Energy, they have a decent dividend from what I remember. 4.03. It's down 3% year to date. Again, I think 100 your swing on this one. It's at 99.74. You probably would sell out at about 103, 104. Their earnings are coming up May 8th. It's just an energy company. So, okay, that's it. If you have any questions, hit me up. Sponsors, if you're paying more than $30 for your phone bill for unlimited service, get Visible. The link's down below. It's nice and easy. Again, I travel a lot. I don't notice a difference. I had a Verizon cell phone that I was paying, I think, $100 a month for. I haven't noticed a difference, and I now pay $25 a month. So if you have an eSIM, it's nice and easy. Just go over there, click on that link, get an eSIM, get a temporary number, try it out. You can use an eSIM with a regular SIM side by side, and it's just do speed tests. Even if that's all you do, and you just pay $5 because the link down below saves you $20. So your first month, instead of being $25, it's $5. So try it out. Again, the links down below. The other links down below are the TrendSpider links. DSP25 saves you 25%. If you like the charts that I have, if you like the watch list that I have, if you like the scans that I do, all of that's in TrendSpider. DSP25 saves you 25%. I give you access to both of my algorithms, the 4-hour and the 65-minute. You can, again, if I travel, if I do things, I was off for the past 2 weeks, sickness and traveling. And, most of the people who had TrendSpider were sending me questions. Hey, is this what you would look at? Is this what you would look at? When I could lift my head off the pillow, I answered you. But again, the links are down below. If you have any questions, there's links to the private Facebook group, the Twitter, Instagram, any of the socials that you want to follow me on. If you make money, tip me. That's all I ask. I'm your bartender. That's what I'm here for. If you buy Uber at 30 and then all of a sudden in 2 weeks after their earnings come out, it's at 40 and you decide to sell it, give me a little tip. I'm not asking for, you know, a 20% tip like a waiter does, even though I probably deserve it because a waiter charges you money. I make you money. And I only ask when you make money. If you lose money, yeah, you're paying a dinner bill with your listening. Other thing that I'd like you to do is go over to YouTube. The YouTube link is on the links down below. If you want to see the charts, if you're just listening and you want to see the charts, go over to YouTube. Just subscribe. I try and post the actual videos now after I actually record them. So there's 2 videos that you'll see usually for each day. There's the live where I goof around with people and I'm a little bit less strict and I'll answer your questions. Those are usually long and they were 2 hours. Then I post a short video because I record the video. So I post a short one as just a separate video. So if you have any questions, yeah, there's the dog crying. So we made it all the way with only a couple of dog cries. Okay, take care, you guys. I will be back in Atlanta tomorrow, so I may be on for a little bit longer. Take care, have fun. And stop. Okay. Holy crap, there was a lot of discussion. Holy cow. VRO's back. Oh boy. I gotta export. No. Hold on 1 second. I gotta go outside and check if the guys are still here. But I think the dogs need to go out. No. No. We're not. Come here. You want a hug? You want a hug? Come here. Patty wants one. You want to come up, Patty? You want me to pick you up? Oh, look at you. Yes, I know. You want to say hi? You want to say hi? I love you. I know I'm going to miss you for a week. I'm going to be gone for a week. Okay. Go back to bed. Oh, go into bed. Go into bed. Okay. Let me look at your questions. Ford. Let's look at Ford. I hate Ford trucks. Ford is unreal, but Ford's unreal for a reason, Andy. Go over here. Ford just doesn't. Here's what you have to know about Ford. They ain't making money. They're losing money. So Ford's debt is putting them into trouble. Year to date, you're up 6%. Their average target price is $13.21. You're at $11.77. And those target prices probably get brought down. Look at 16 to 15. Equal weight February $13. Look at the insider transactions. They're selling at 12 and 13. They know it ain't going up. God, 26.88. They sold at. Whew. Yeah, I Tesla's price cuts will make Ford lose money on all of their EVs for the upcoming foreseeable future. So I'm not a fan. Samsung, yes, Samsung will be removing Google as their default browser. They haven't announced it, but they absolutely will. Morning, Brandon. Morning, Zephan. Brittany, bitch. I don't know. TQQQ. Brandon, if you're going to trade TQQQ, I'd do it on the 65-minute algorithm. And look, you got no confirmation. SQQQ is still your play. You're up 2%, 25.93. So you're going to open up about here, which would put you at confirmation on TQQQ. But it's floundering. If it opens up above that 9-day, I think you're good. It's oversold. It's at 24 on the RSI, and that MACD's going down. I'd rather see the MACD start to move up a little bit. But again, this is 65 minutes, so it moves a little slow. If you move over here, let's move you over to Active Trader Pro. Oh, hold on one second. I gotta select Active Trader Pro. There we go. So if we look, TQQ, and in my day trading strategy where I use the 5-minute chart, and we zoom in. Oh, come on. There we go. You still don't have confirmation on this one. I like to buy over the 5-day. So, just be careful with buying TQQQ. Hopefully you guys were around. If you weren't around for the beginning where I went over SPY. Hold on one second. Dog is crying. Okay, here you go. Come here. Hey. Go. There you go. There you go. It's a nice big bed for you. Hold on. Let me charge these up. So that I have some. There we go. If you weren't around, here's where I worry about TQQQ. If we go to Safari and we go to SPY, and now I'm looking at SPY because it's fairly clear. And I say fairly clear that it's confusing. So here's the descending wedge, and there's the ascending wedge. The red, ironically, means that we're going up, and that would be a bull market. The green means that we're going down, and we're still in the bear market. So this very well could have been just a bear market bounce. That's where I'm worried about TQQQ, and I don't want you holding TQQQ. I want you to put stop losses in on TQQQ that if you're down 5%, get the fuck out. If you're up 10%, get the fuck out. That's where I think you spend 5% to make 10%. That's where I think you use TQQQ. So IBM, Brian. IBM's tough. Just because, ironically, it's funny. This is the 65-minute algorithm. It has you in at 124. Let's look at the 4-hour. IBM is old tech, and it's not bad, but it's not good. Their ex-dividend date is coming up May 9th. The RSI is down at 39. I think you could get to 130. Its average target price is 142. I mean, April 20th doesn't convey confidence that everybody's bringing their price target down. That's where I'm kind of like, IBM's okay, but it's less exciting to me. I'd rather put my money into Microsoft at 300 than IBM at 123. Put it that way. And yeah, Brendan, you're right. They're in quantum computing. They're in mainframe. They're getting into cloud with Red Hat stuff. I think it's a company that is transitioning. The problem is, as they transition, Wall Street says, well, they're still a behemoth. They're still old tech. They're not going to get the valuation of new tech. So I think there's some people who hold on to it. I think it's okay. FRC. I have to go over before you guys got on Active Trader Pro. Before I got on, let me see. I gotta quit GarageBand. Save. I was looking at FRC. FRC, I mean, you could day trade this one. I mean, look at it. It's at 714. You went all the way down to 6s. Now, I don't think that you're looking at anything good. It's just capitulating here. I think once it actually opens and the market opens, I think you're going to see a huge drop in this one. Christian, the savings account, pulling your money out, no. I have pulled my money out of that savings account. I actually deposited $100 and then pulled it right back out. It was a 3 to 4 day settle time in each, because it's a savings account. It is a bank, so it's a 3 to 4 day settle time, but it is as easy as clicking a button. So Apple, the Apple Wallet, it's super, super simple, super easy. Anybody that's telling you it's tough kind of just doesn't know what they're doing. You do have to link up an existing bank account to it. So you do have to link up a current bank account. It can't be your only bank account. Because getting cash out, it's not, I don't think it's a traditional savings account. I think that you're right that it's just not a traditional savings account, but we're about to open up on FRC, and that's what I want to see. I want to see the move on it. Humana up. Zevin, be careful on end phase. I'm going to continue looking at that one. End phase. And I looked at this one. The only danger of end phase is that you have been up so much. It's never dipped down below that 200-day, and it's as close as it has been to 200-day. I think you could use the 200-day as your support at 146, even though it's trading at 176. But I think you're right. I think they're going to get it right. Their guidance was bad. The danger of end phase is if for some reason the debt ceiling negotiation goes about and Republicans wind up pulling back some of the spend, I think you get screwed. End phase could get completely screwed over on that one. You did miss the SPY chart. It'll be damned. Yeah, and the only reason I brought up Duke, Christian, was because I think Duke Energy does things right. Yeah, I forgot to bring up Mara. Let me look at PBLA. Dude, this is one of your crazy biotech stocks. Let me see, PBLA. Why would you buy into this? Why would you think this? Oh yeah, this is a great investment. It was at 57 here, and within a year you're at 42 cents. I don't see anything. I mean, it's not covered. I just don't see. PBLA. It's down 85% year to date. They're under $1, so they're going to get unlisted. Hold on. Go on the 65 minute. Stefan, you got the 65 minute. It's up 70%. It's all hype. Look at the volume. Look at the volume spike. I mean, the last volume spike on this one was April 12th. Was up 19%. So if that volume spike is anything, yeah, it's up at 69 cents. Trade that on a 5-minute chart. Maybe even a 1 minute. I'd go super tight on that one. Yeah, but Andy, here's what you have to look at. So, Man U, their market cap is $3.39 billion. So each share is worth $21. Ford, their market cap is $47 billion. So each share is worth $11. So each share of Ford is diluted so much that it, 11 versus 20 is kind of irrelevant. The other thing is, remember, Ford's not making money. You look at Man U, I guess they probably just don't have to publish. It's probably a tracking stock on the NYSE. The average target price is 27 on Man U, and they're trading at 21. Look at when they got hyped up for the sale, it was at 27. So let's look at Microsoft. Look at that gap. We're going to go to the daily of Microsoft because it's going to create a gap. So here. This is the daily. And so if you don't touch 283 on Microsoft, which you probably won't today, you're going to have a gap, which means you're going to cover that gap on the way down. And again, being close to 52-week highs, I think you're probably, good there. And watch Apple. If Apple hits 162, that could be a danger mark, a danger sign. Okay, I'm moving you over to Active Trader Pro. We will watch. I want to watch FRC. FRC at 651, it is halted. FRC crashed. FRC is halted. FYI, it's going to open up at 5. Everybody's trying to sell their shares. Okay, let's go to dashboard. And yeah, I pulled the Jim Cramer where like 2 days ago I said FRC was a good buy at 13. Tomorrow I'm going to show up and cry. No. Do you have to go out? No. Come here. Come right here. Okay. Come here. Oh, I love you. I know. Oh, I know. Let's go into bed. You can't. No, we can't go out there. We can't go out there. You'll start bugging people. It's not going to be a good scene. It's not a good scene, Daisy. I'm turning off my do not disturb because my housekeeper is going to clean my house in Atlanta before I arrive. So, we got to bring up Mara tomorrow. I will be right back. I gotta take the dogs out. Do you have to go out? Penny, you wanna go out? You, I'm gonna pick up. Okay. Okay, hold on. Daisy, let's go. Daisy, in. Come on, in. Let's go. Let's go. Come on. Yup. Inside. There we go. Let's go. Good girls. There you go. Good girls. Dog was crying because she had to poop. Sorry. Whew. Okay. Copy. And I want to put in Thursday. We're going to start it off with Mara. Mara, you lovely Mara. Okay. I've got to go to my previous episode and copy this. We're going to, okay, let's see. FRC. soft. Uh, 23. Okay. And I'm going to publish this one. Publish now. Okay. And then what I'm going to do, I'm going to do Twitter. We're going to post this. Spy. And then we'll just put boom, boom, boom. FRC. What was that one? Okay, we're going to tweet that out. Okay, who's got something for me? I'm about to upload the YouTube video. YouTube. Upload video. Do select file. You mean limit orders? Yeah, I always do limit orders. Meaning I'll say a certain amount of stocks at a certain price. I will never do a an order that is just wide open market order. There's no way I'll ever do a market order. I will do a market order on some that like say I, for some ungodly known reason, just decide, you know what? And I did this, I think I did this with Oxy during a time where Oxy was trading at crazy speed when it was announced that Warren Buffett got in. Okay, active trader pro just crashed. And I decided, okay, I'm just going to do a market order. And it worked out. I think I got it, for a decent amount. But it's not something that I will regularly do. So it's not something that I never do. But 99.9% of my trades are limit orders. And I do not use... stops. I have stops in my mind and limits. Stops, but typically if I'm day trading, I will watch it. If I leave, then I'll do a stop. But let me see. Sorry, I'm trying to. Okay, there we go. Now I've got to go to Canva. No. No. Fidelity has a thing called trade armor. I've never heard this. Never heard the fans this loud. Never heard the fans this loud on this computer. Wow. They are loud. Let me do something real. Why is it that? There we go. Google. $426 and there we go. We'll do that. Okay. Share. Boom, boom, boom. Download. Download. Bum, bum, bum. Quit. Let's look at the upload thumbnail. Downloads. There we go. No. Next. 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 Publish. Okay, sorry. Processing. 7 hours left. Great. Let me see. We're gonna close that. Gonna close that. Gonna close that. We're gonna close this. I'm gonna close that. I'm gonna bring you guys back over to Safari. My Active Trader Pro crashed. Let's see. Now, Zevin, I don't use the trade armor stuff. I will, like, say, for instance, I trade something in the morning and it hasn't hit where I think it's going to hit, down or up. I will either get out or I will put those contingents in. Meaning if it goes above this, sell it. If it goes below this, sell it. But only if I can't watch the stock, if I'm day trading. If, long-term stuff, I can usually make my determination while I, look at it. EBIX. Let me look at EBIX. What is EBIX? EBIX. Oh, yeah, that bump. Ooh. 1307 up to 1623. Software. PE 7. A software company with a PE of 7. Price to sales 0.46. They're down 18% year to date. Average target price is 39. They're trading at 16. Something's wrong. Provides on-demand infrastructure software exchanges and e-commerce services to the insurance, financial, travel, cash remittance, and health care industries in the United States. It's an insurance. That's why it's so cheap. This is from April 10th. End-to-end financial exchange, which includes last mile network. Here's what you have to know about India and financial networks. I think 2% of Indians pay taxes. They can't find everybody else. So it's a cash society. It's my understanding of India, at least when I've traveled in India. I can pay with my credit card and stuff in most places, but Joe, I just don't know enough about it. But from a stock standpoint, I mean, it's on a. They made 70 cents a share. They made 36 cents a share. The average target price seems way over. It hasn't been covered since 2018, and the reason its target price is so high is because these guys in 2018 said the price was 108. Why in 2018 did they say 108? Because it rallied so much. I don't know, Joe. I swear, if you know something about it, great. If you don't, I'm hesitant to say. I mean, I can see. Here's what I can see: 92 cents a share, $1.06, $1.04, $1.08, but the price is still going down. $1.03, price is still going down. $1.04, price is still going down. We hit COVID. Hits $13. All of a sudden, you get the bounce back up here. All of a sudden, in January 2021, which is the high, we hit 51, and you kind of get this. Then all of a sudden, there's a gap all the way down, and you seem to over March to over 1 year, you almost try and cover it, but you don't, and then you just crater. So I don't think I'd be buying that one, but day trading, I think you could trade. I just don't know enough about it. So Google's cash cow is search. Search is going to be hit by AI, because you can tell AI, you can train a model on Google and have it do better search than Google will. So they'll be hurt because there will be more competition, and prices will essentially come down. Google is still the best at it. Google is still the king of search. It's the ancillary stuff. There are people moving away from Google into Microsoft. So Microsoft is taking some of the services away, meaning Google has an operating system which nobody uses, like Chromebooks and stuff like that. It's all web-based. Microsoft has kind of moved into that. So Google will no longer be the king. Google's cloud is still growing. So they're not getting hit by it, but there is downside. Here's what you have to know about Google. If Larry and Sergey get somehow back in it, those are the guys who understand it. I think what Google is having now is a crisis of identity. Who are they? What do they do? What are they focusing on? And where are they going? Microsoft is a software company that's focused on the cloud, that has some gaming initiatives, that wants to, quote unquote, own that consumer and business relationship. Remember, they used to be heavily focused on business. Now they're heavily focused on consumer, between the gaming, the search, and some of the other initiatives that they have around some of the home computers and stuff like that. Ooh. Oh, that's my do a 1 minute plank. So I still believe, and the reason, Christian, why I'm still in Google is I use Gmail. I still use Google Maps, which is, probably the supreme standard. Apple Maps still hasn't made its way completely into my world. I still got Google products. So, and remember, my number one rule is, if you use it, buy the stock. Hold on, I got to blow my nose. Boom, boom, boom. Yeah, Joe, like I said, I could be wrong. I could come on and cry like Kramer did about Facebook. But let me see where I'm at. I got to go pack here soon. I still haven't packed, and I'm leaving in a couple hours. But I'm just going to my house, so it's not like, even if I don't pack anything. I'm up 0.61. Wow, shit's down. I'm up 0.61%. Okay. I am out of here. I think I covered everybody's questions. I will see you guys tomorrow. It'll be bad quality, but I'll still see you tomorrow. I'll be at my home in Atlanta. You'll see the background. It'll be familiar. Okay, folks. Oh, by the way, if anybody wonders, I'm flying Frontier Airlines. I could have bought the ticket, I think, for $25 at its low. I wound up using miles, so I'm paying $11, but it was only 10,000 miles to fly back and forth. So yeah. Frontier Airlines. Cheap. Okay. Take care.